Alrighty, welcome back to Weenie Trades. So in this video, I'm going to be just giving a quick day trading recap. It was a pretty good green day. Starbucks mostly paid the bills. It's probably because I'm a coffee muncher, and I was also drinking out of my big Starbucks mug today. So Starbucks was the biggest trade of the day, and Starbucks was from the game plan, and it's been in the game plan for many weeks. So if we take a look at the Starbucks daily time frame, we talked about how, hey, we made a nice good high, and now we got good chart vibration, and we're starting to slow down the selling pressure, building a nice good support there at 110. We start to do a nice good inverse head and shoulders, left shoulder, head, right shoulder. I can just draw 3 circles as we go through there because it works. It doesn't really matter so much the pattern, but more so the psychology of the pattern. Again, patterns don't need to be perfect. We just want to identify, hey, is the stock more likely to go up or down? And these 3 little lumps identified to me that the Starbucks was most likely to go higher. Nice good move on Starbucks. We're approaching all-time highs. I'm going ahead and buying Starbucks as we start to break out over 118.83, and then we start to pull back. And after this big move, I didn't really take off too many profits off at 119.29, and I really just hit my stop loss at break even at 118.80. But that's okay because I can get back in. I got back in on Starbucks just at about 119, and then boom, we get a nice good rocket ride rip. As we're starting to explode higher, I'm selling my call options first because that's when the IV starts to really increase. I want to be an option seller when implied volatility is high and an option buyer when the implied volatility is low. So Starbucks, really nice, good day trade. And then I'm still swing trading Starbucks with a little bit smaller size. So we've got this debit spread right here, 119 into 120, very minimal risk. As you can see, I'm only risking $17, but $17 can turn into $100 if Starbucks closes the week right above 120. So very good, low risk, a high reward. It just needs to be combined with the proper technical setup. I bought this debit spread when the IV was low, and now that the implied volatility is starting to increase as Starbucks moves higher and higher, that's what makes this spread start to mature a little bit more. I'm also swing trading just a little bit of this, just this call option right here, Starbucks 116 call, and this is nice and in the money, which is super awesome. We bought this just a couple of weeks ago, and right here, just $148. Everybody's so googly-eyed when they see a penny stock go up 168%, but people don't tend to think, oh, what if I just swing trade, a large cap that moves up a few percentage points? Okay, that can get that same type of return. This type of return doesn't happen all the time. A lot of options expire worthless. If the stock goes sideways or chops around, it can really start to burn you, which is why options have their own inherent risks. They're their own little asset class, their own little derivatives market. So that's something to keep an eye out for as we move through Starbucks into the future. Still targeting much higher prices on Starbucks. Maybe if we check the options chain, I'm expecting Starbucks maybe gets as high as 121 this week. That's right about that 55% mark. And then maybe by next week, maybe we can go another dollar, 122. So Starbucks likes to move about $1 per week. But if Starbucks really starts to go parabolic, then those call options will have to reprice, and my call options implied volatility, the IV will get inflated. And if Starbucks really starts going vertical, that's why I'm going to try and sell that long call option. Amazon put a few gray hairs on me, and it was mostly due to slippage. So Amazon made new all-time highs today. We had a nice good little flag pattern that broke out, and then we started to back test it. And once we started to curl up, I went ahead and bought Amazon just at about 37.60. I'm getting filled at 37.63. So I'm taking massive slippage, and boom, just had to stop out of an Amazon, put a few gray hairs on my head. Net with Amazon, including the options, minus 179. It happens. It's part of it. Similar thing happened on Shopify in terms of the spreads, where I'm buying Shopify over 1,500, placing my stop loss at 1497.50, and just these low wicks get me, and I didn't want to get back in. I was like, the spreads are just too awful. Shopify, nice good move on the day, but unfortunately a red trade. So right idea, but still lost money because of my management style, which is why it's a whole nother aspect of trading that takes a lot of development and time, and it's more of an art than a science. Besides the Starbucks trade, my second best trade of the day was actually on Tesla, and it was actually a losing trade. I had other winning trades today, but Tesla is a losing trade today, but I'm actually really proud of it because I had a chance to have a really big winner on Tesla. So what did Tesla do in the morning? Well, Tesla was bullish. It was gapping up. It was showing relative strength. It had a nice good action yesterday. It had a really good bid underneath it that was pushing Tesla higher. And I was looking at Tesla, I was like, maybe we could get a little bit higher, but there was still this big overhead supply. But I gave Tesla a chance still. Being aware of the overhead supply, I can still go long and place a stop loss. So right here, we moved up, we pulled back. And as we started to curl up, I go ahead and buy Tesla at about, 689, probably about 689, with the stop loss just underneath 687. So a 2-point stop loss. We get a nice good move higher, and I'm looking at the pre-market high over here at about 694.74. If we start to break that, there's a decent chance Tesla could break 700 today. Well, the thing is, as we come up short in front of it, we start to sell a little bit. I go ahead and sell a little bit, sell a little bit, sell a little. That way, now you've put in some profit in your pocket, and then your stop loss doesn't really hurt so bad if it hits. Well, selling a little helped out. Obviously, I wish I would have sold it all and just taken, good $100, but the market doesn't always work that way. Sold a little bit, and then Tesla slammed down, stop loss, and look at all the money I saved myself by stopping out on Tesla. Super thankful for that. Really nice, good trade on Tesla. And that concludes the trading day and the trading recap. Keep an eye on StarBucks. Keep an eye on the tech stocks. Google. Keep an eye on Amazon for continuation. mRNA. Keep an eye on for mRNA for continuation to the high side. And there we go. It's already still going through the dip buy. So keep an eye out on those stocks. Thanks for tuning in, you guys. Peace out. Bye-bye.